All right. Hello, everybody. Thank you for being here today. I think it's time we go ahead and get this show on the road. We'll get this party started. I'm Jacqueline Kelly. I'm the broker owner at Better Homes and Gardens Real Estate Destinations located in South Florida. We cover the Florida Keys and Miami-Dade counties and sometimes Broward and other places too, but we're located down here in South Florida. So keep in mind, we have some information today that it will be useful for you no matter where you are in the country or maybe even in the world. Some of it will be a little bit localized and will pertain to South Florida in particular. There might be some small differences based on where you are, but most of all, the information is going to be pretty general that you might be able to use in other locations. If you need information based on where you are, feel free to reach out to us. Anybody here at Better Homes and Gardens Real Estate, or the agent who gave you the link today, and that will be your dedicated agent. We're happy to help. So without further ado, I'd like to introduce my panelists today and give a quick thank you also to my committee members that were behind the scenes and helping to put some of this together. So we have on our panel today, we have Karen Williams de Castro. I'll be turning the mic over to her in just a few minutes, and she's going to take over. And today our topic, of course, is financing and all things financing. It's a huge topic, a very loaded topic. So if you have questions, feel free to put them in the chat as well, and we will read those off at the end. So Karen Williams de Castro is an agent here at Better Homes and Gardens, and we have our fabulous financier, Lizette Romero of the Florida Mortgage Lab. She does a lot of loans for our clients. She's a wealth of knowledge, just an amazing person to work with, our superhero. So super glad to have her on. We have Jana Pratt from Better Homes and Gardens as well. She's here to talk appraisals. And Eileen Clark is going to hop in and as our expert appraiser today. So we have a great panelist, lots of information. So again, feel free to put your questions in the chat. And a quick shout out to our committee members that helped put this together. Our other agents here at Better Homes and Gardens. We have Erin Keel, Samantha Arce, Stephanie Camacho, and Ada Rodriguez, and they all really helped put this together. So I'm excited to see what you ladies have in store for us today. I know there's going to be some great conversation. So I'm going to go ahead and pass it on over to Karen Williams de Castro, and she's got a great lineup for you. So thank you, Karen, for being here. Take it away.
Jacqueline. So thanks to everyone who was here. Oh, I can hear myself. It was just really weird. Thanks to everyone who's on today. Today, we're going to talk about financing and appraisals. Financing is a big topic, like she said. So we did bring someone who knows everything financing with us today. So a little bit about me. My name is Karen. I'm a realtor here in the Florida Keys. I've been a realtor since 2015. I'm also local. I was born and raised here, and there's no other place I would like to be. So we're going to start off by talking a little bit about what we discussed just last time, just to kind of bring this together. So our focus today is going to be on the realtor role and the role of the lender and how we all work together. So step one in the buying process is to find your realtor. That time your realtor will do what we call a buyer's consultation. This step is very important not to be skipped. It's going to help your agent know exactly what you're looking for in a home so that they can help you with that search. But it's also going to allow them to have a little bit of background so that they can pair you up with the proper lender. And then once that happens, we can get you to the closing line. So the lender that we're going to talk today is Miss Lizette she is the broker owner of the Florida Mortgage Lab. And we're just going to start with letting Lizette tell us a little bit about herself. So Lizette?
So a little bit about me. I have been a part of the Keys community since the late 90s. I have been in the real estate industry since that time as well, since I was 19. So we're talking over 22 years in the real estate industry. About, I would say about I think it's coming up on 8 years now, 7 or 8 years. I got into the mortgage side of the industry. And I've learned a lot during that time until I went off on my own and opened up the Florida Mortgage Lab last year. So I actually just celebrated my first year being on my own, and it's been a wonderful, wonderful ride. And yeah, I'm excited to be here. And this is pretty much all I've done is real estate in my adult life.
That's awesome. And we're excited to have you. Can you guys hear me well without me having to turn my mic on? Perfect. That way there's no feedback. So you've been doing this now for 8 years, is what you said, and I've done tons of business with you. My clients are always very happy with you.
Yeah.
Can you tell us a little bit about what a lender does?
Yes. So there is a difference between a lender when you talk about a big bank and a mortgage broker, which is what I am. I'm a mortgage broker, which means that I have access to many different products, many different lenders and banks that offer different things depending on what their client is looking for. So really quick, there's a big difference because when you go to a lender, and let's say Bank of America, Wells Fargo, Chase, any of those big banks, you are only able to do what is in their little box of financing, what they can offer. If you come to a mortgage broker, I have a plethora of choices and products to fit each individual bar depending on what their needs are. So we facilitate the financing between that stands between you and your home that you're trying to get into, whether you're a buyer for your first home, a second home, a vacation property, an investment. I help you bring it together and make it happen.
That's awesome. Yeah, a lot of times people do need to have multiple options for not everyone's going to be able to use a bank. And it's great that we as realtors also have the relationships with the banks and with the lenders, with the brokers, so that we're able to make that determination on what is best for our client.
Right.
So let's say that the person comes to you, what can the buyer expect as to what type of paperwork they would need to have for you if it's their primary home?
Okay, so for primary financing, it's pretty simple actually, despite the anxiety that people usually get when they're applying for a loan. If you are a W-2 employee, I only need the most recent 2 years of your W-2s. I don't need tax returns. You don't need to go digging through boxes. Just W-2s for the last 2 years, most recent 30 days of pay stubs, and 2 months of bank statements that show the money, the funds to close for down payment and closing costs. Once I have that, plus your loan application, which I will do with you over the phone, or if you're comfortable filling it out online, you get a link. It's very basic information. Just ask about your work history. You do have to have 2 years of work history. Your address, where you've lived for the last 2 years, just like a kind of quick story on what your scenario is. I take that information and put it all together with your credit, and that's it. But it's really minimal documentation for primary purchase.
What about if I was an investor? What type of paperwork does that differ?
It does. That's a whole nother product. Now, for investors, there are several different types of loans. Most investors choose to do the no income option, which is the DSCR option. So in that case, all you need to do is fill out a loan application. I would pull your credit. And again, with that loan application, I will know if you own other properties. If you do own other properties, then you'll just have to show documentation on those properties you own. For example, any mortgage statements, insurance policies, taxes, HOA bills. But the DSCR loan is a great product because you don't need to show income. You don't even put what you make on the application. Nobody asks, nobody cares. There's no taxes, there's no nothing. It's just based on the income that the property can bring in. It's a cash flow type of product. And it's actually very, it's been a huge hit because of the lack of documentation that you need to come with. Now, if you do make tons of money on paper, and you have taxes that show you make all this money, then you can put your 20% down. You show 2 years of tax returns, especially if you're a self-employed borrower. Tax returns are very important. And bank statements, it's almost the same thing. It's just a little bit more detailed because there's more documentation, and it's a higher risk loan because it's not your primary house.
Got it. So for any investors that may be listening, also, coming up, our next webinar is going to be about investing. And so you'll get a little bit more information about that. And Lizette, you just talked about the DSR loan, which is a great, option for our investors. And most people are familiar with the loan options that people offer. There's a lot of misconceptions about those, though. There's misconceptions that you must have 20% down, you must have a 750 credit score. And also we have a lot of people, especially here locally in the Florida Keys, and also like in Homestead, places like that, where there's service industry people and a lot of self-employed people. So can you talk to us a little bit about some of those myths and why they're not accurate? And then we can talk a
Absolutely.
little bit about some of the loan options that they have.
Yes, so the 20% down is the biggest myth, and I'm always so surprised to see how many people still don't know that that is not a requirement when purchasing your primary home. Now, there are instances where 20% is required. For example, on investment properties, that's almost I mean, there are few products that you can come in with under 20% down. But to go back to our primary home buyers, if you're a first-time home buyer, you have two options. If you're going the regular standard loan, it's 3.5% minimum FHA. That's one option you have. If you go conventional and you're a first-time home buyer, your minimum down payment is 3%. And just so everybody knows, what qualifies you as a first-time home buyer? That doesn't mean that you've never bought a home in your entire life. That only means that in the last 3 years, you have not purchased a home or you have not been on the title of a home. That is what makes you a first-time home buyer. So if 4 years ago you were on the title of a home and in the last 3 you haven't been, you're a first-time home buyer again. So you can buy a house with 3% if you go the conventional route, 3.5 FHA. If you're not a first-time home buyer and you go the conventional route, the minimum down payment is 5%. So that's a huge misconception. Yeah, of course, you can put more than that down, but do not feel like you need to save up 20% of anything to buy a house. Another huge misconception that people have is that you have to have this super high credit score, 750, and be a rock star. That's also not true. I have products where you can come in with a 580 on an FHA product and buy a home, and you can get down payment assistance. There's just so many options and so many things out there that people are not aware of, and it really surprises me every day how people don't know.
Absolutely.
Mhm.
And you talked about the DSR loan, you talked about first-time home buyers. And I think most people are familiar with like the VA loans, conventional loans, the FHA loans. But there are other loans out there too that people can use. There's construction loans, there's other things.
Yeah.
Can you talk about some of those that you've had some success with
Yeah.
into getting people into houses?
The construction loan is also a really great product because typically when you do a land loan, the down payment minimum for, if you're gonna go through lender financing is usually 35%. And that's a lot of money when you're trying to build a home and all that stuff. But if you go the construction loan route, you can get the construction loan helps you buy the land and construct the home with one closing. And you, as a primary home, you can come in with as little as 5% down versus 35 if you were to just buy the land by itself. It makes it much easier for the borrower to come in, buy the land, and build their home. So that is, what the great part about that too is that you close in 30 days. Your construction starts on your home, and let's say it takes 9 months or 12 months for the home to finish. Once the home is done, the loan automatically flips from a construction loan to a regular fixed rate conventional mortgage, or conventional mortgage. And you don't have to go through another closing. There's no more closing costs. Everything was done in those first 30 days. So it's a really great product. Now, if you already own the land, the value of the land will count as your down payment for the mortgage that you're going to get to build your home. So there are so many things that people, you know, don't realize that they have at their fingertips to use. And then while we're talking about different loan products, I did mention the DSCR program, which I think is a great investor option because there's no income involved. It's just a cash flow type of loan that depends on the cash flow that the property can bring in. As long as it covers your principal, interest, taxes, and insurance on the property, you've got the loan pretty much. You can also buy, I'm sorry, besides the DSCR loan, for self-employed borrowers, you also have bank statement loans, CPA loans, P&L loans. These are loans where you do not need to show taxes. As a self-employed person, I also understand that it hurts us to declare everything we make on taxes because we have to pay so much out to Uncle Sam. So a lot of self-employed borrowers, you know, they take all the deductions they can, but what happens is when it's time to buy a home, that bottom line number is not enough to help you qualify for a loan. So a bank statement loan allows you to not show taxes at all. No one will ever ask for them. You show 12 months of bank statements showing the income deposits from your employment, and it's averaged out over the course of those 12 months, and that is the number that we use to approve you. Now, if you were to buy a primary home using that product, the minimum down payment on that is 10%. And there are other credit, you know, regulations and guidelines. But if for more details, please contact me and I'm happy to walk you through it. I mean, I could sit here until 8 p.m. with all of the rules and everything, but there's a lot.
So as you can see, there are so many options, like she just said, in order to get you into the home that you want or the investment property that you want. And this is why it's really important that once you pick your realtor, that you guys sit down and you do a buyer's consultation. The more information that your realtor has and knows, it's going to help her or him be able to connect you with the proper lender for what you want. And then your realtor is also able to give background information to the lender so that the lender can make sure that she or he is offering you the best options for your scenario. This is just one of the ways that your realtor and your lender partner works together. And with that being said, I do want to touch a little bit on the realtor lender relationship. Absolutely. There are so many things that the realtor can do with their buyer or their investor or whatever it is, to help facilitate a great transaction. And one of the things that we need to do is make sure that we're the source of the source and not the source of information, because things in the lender world, I'm sure, changes every single day. And so I want Lizette to kind of touch base on this, just because I also know that there are realtors and real estate agents on here watching. And our job is to make sure that we do everything in our power to make sure that we can help our buyer purchase their property. So I want Lizette to just kind of talk a little bit about some things that the realtor can do to make sure that we're helping in the transaction instead of hindering. And that way we can lead our buyers to the finish line a lot faster and smoother.
Yeah, so one of the most important things that a realtor can do is not talk about rates, not talk about lending guidelines. Just don't talk about lending. Refer them to your lender, because there are so many details. People don't realize all of the details that go into financing. It's not so easy as to just Google what is the market rate today, because there's like 40 something or maybe more factors that go into what rate each borrower is going to get. Their credit profile being one of them, the type of property they're buying, the area they're buying in, their job history. There's so many things. So when a realtor tells a client, yeah, I saw in the news today that the rates are 5.5, and then the client comes and he's being quoted 7, it blows up in all of our faces. Same thing with closing costs. Maybe not tell the client about closing costs, because when they get that first loan estimate, which is 100% always over disclosed, and they weren't prepared for it, that's gonna be another hard stop on the borrower side, and it doesn't help any of us reach the finish line, including them. So same thing with me when a client comes to me and asks me questions about a contract or the property or their escrow deposit. I never answer. I immediately send them back to the realtor who's working the transaction to answer those questions. So I think that's one of the most important things, and what the biggest problem that I run into working with new realtors that I don't have a relationship with is that. So I mean, that's really the main thing, then the one that comes to the top of my head. Otherwise, the realtor and the lender work really well together, as long as everyone understands their roles in the transaction.
Absolutely. So as you can see, when you talk to your realtor or your real estate agent, they will have that buyer's consultation with you. It is super, super key that they do that so that they have accurate information based on the questions in there to give to the lender. And that way, the lender is prepared to give you all the answers to all the questions that you may have. When you do go to the lender partner or partners that your real estate agent has recommended to you, then you want to make sure that you ask that lender some questions, because you need to be very comfortable with who you choose to walk you through this process. You guys are going to be stuck together for probably at least 30 days. So you want to be comfortable with them, and you want to make sure that we as realtors want to make sure that you are comfortable with them and can move forward throughout the whole transaction. And so some of the questions you may ask them, do you have an origination fee? How long is it going to take for my loan to close? How soon do you want me to give you these papers that you're asking me for? What's the best method of giving you those papers? What's the best method of communicating with you? There's a ton of questions that you can ask them.
Mhm.
And if you get back with the agent who sent you this link, they have a handout that they can give you with a ton of questions that you can ask. And also, don't forget, this is a huge purchase that you're making. Your lender and your real estate agent, they want nothing more than to help you get that. So ask whatever questions you feel like you need to ask. I think the one thing to remember is that this is likely going to be one of the biggest transactions that you're ever going to make. You need to ask all the questions, be completely comfortable, and there is no such thing as a stupid question. Everyone says that, but in this case, it is true.
Yeah.
Any question you can ask, any lender that's worth their salt, they're going to answer those questions for you without hesitation. And they're not going to cut you off. They're going to have that conversation with you.
Absolutely, absolutely. I appreciate when the borrower asks the questions, because they're not going into anything. They're not blindsided. They're not gonna, when they get to the closing table, they're comfortable. They feel good when they see that closing statement or that closing disclosure. They're not surprised by it. I've already gone through it with them. And I urge my clients, please call me if you have a question. And if you call me and I don't answer you, trust me, I'm calling you back. That's one thing. I'm really good with picking up my phone, as every lender should be. I also ask the borrowers, put all your questions in an email as you go through your documents, because then you don't have to call me every 2 minutes. Just put it all in one, and I'll reply and give you all the answers. I have borrowers do that too. But I do urge my client to ask all of the questions, know exactly what you're getting into, know why you're giving me this document, why I'm asking you for this. I mean, I do pretty good in explaining why anyway, but I do like my borrower to always feel 100% comfortable and not in the dark. Same with my realtors. I try to keep everyone updated as much as possible, and they can also always call me at any time to ask anything, because I think it's really important, really, really important to keep the lines of communication open. So yeah, there is no dumb question. There isn't. There really isn't.
Absolutely. So one of the things that the lender does for you is the lender orders your appraisal. An appraisal is absolutely necessary, but I'm not going to talk about appraisals. You've heard me long enough for right now. So I'm going to pass the microphone over to Jana. She has a special guest. She has Miss Eileen Clark, who is going to come on and give her expertise on the appraisal process as well. So I'm going to pass it over to them, and go from there.
Can you hear me now? Sorry about that. Something with my unmute button. I'm Jana. I'm an agent at Better Homes and Gardens. I do have a guest speaker with me here today, Eileen Clark. Hi, Eileen. I want to thank you for joining us. And I really appreciate you coming to answer some questions about appraisals. I just want to start off, Eileen, could you tell us what exactly is an appraisal and maybe what it's for?
An appraisal. Hi, everybody. I'm Eileen Clark, and I live in Marathon in the Florida Keys. I've been doing appraisals. It'll be 20 years, February 18th of this month. So I guess I didn't realize I've been doing it that long, but I did work for a lender. I worked for, if anybody remembers, World Savings Bank. I was a staff appraiser for them for 9 years. And then after the crash in 2005, 2008, the bank sold and we all got our walking papers and I became independent ever since. But I did work for 4 years directly for Fannie Mae, doing all the short sales and the REO inspections. I have a lot of different varieties of, I know what the banks are looking for because I did work for a bank for 9 years directly with the underwriters. But of course, every bank has different ways they do their loans. But otherwise, appraisals are always or normally ordered by the bank. I mean, I do other appraisals, but they're done for finance reasons. They just need support that the value's there. The only difference is sometimes an FHA will require a little more data than a regular appraisal, which is they just want to know, they want pictures of the attic and things have to be in working condition. There has to be appliances, there has to be flooring. Everybody gets all hung up on their condition of their house and bedroom and bathroom count. But for an appraisal, a bedroom basically has to have a closet and bathrooms are either a full bath or a half bath. And a lot of people get hung up on condition. In an appraisal, we only have 5 conditions. We have starts from C1 to C5. And a C1 is basically new construction and a C5 is uninhabitable. So in reality, I really only have 3 to pick from. If it's a house that was 10 years old or 8 years old, I really only have a C2, 3, or 4. So based on the comparable sales that I'm using is kind of how I rate what the subject is. So it's really an overall condition, but they'll say, well, but I have new flooring. Okay. I have a new air conditioner. Well, that's maintenance. Everybody has to keep their air conditioner working. Or I have a new hot water heater. Well, that's great. That's maintenance. But it's an overall picture, but a lot of things are considered average maintenance. You have to have a hot water heater. You have to have heat and air conditioning. So that the other thing that's easy for an appraiser is everybody wants to help pull comparable sales, which is always helpful. And I will never turn down people handing me sales. But an appraisal has 3 basic things. And one of them is you have to bracket the subject. So I need a sale that's similar in size. I need a sale bigger and I need a sale smaller in square footage. That's one of the basic appraisals. So yeah, you might hand me a comparable sale. My subject is 1,500 square feet and you want to hand me one that's got 3,000 square feet. That's not going to help the appraisal, but it's a great comp. It's pretty, but not for this purpose. So appraisals, I guess, because I've been doing it so long, it comes naturally for me, but it's more an overall picture. It's what the bank is looking for. I'm just the eyes for the bank to give them the pictures of what the condition is in and neighborhood sales.
Okay.
Any
So,
questions?
Eileen, can the lender ask you a question quickly?
Sure.
You'll have to unmute it.
Oh, I don't. Eileen, can you hear me?
Yep.
I feel like this is such a treat because for those who don't know, I'm not allowed to speak to appraisers on any transaction. So I'm excited to have someone that I can speak to. My question is on FHA appraisals. I know that I run into a lot of borrowers who are approved for FHA and then their offers aren't accepted because people are scared of the FHA loan, which in my opinion is silly. But I think it's because of the appraisals and of the requirements that are needed for the FHA appraisal. So what are the things, the biggest things in an appraisal that will prevent an FHA loan from going through?
The big one I know of is flooring. It has to have flooring, working appliances. Can't have like a blue tarp on the roof, like you got a roof leak going on. It has to look like it's in livable condition. I don't. I have to show what's there. I called it a kitchenette, but
Did it
same.
have
So an FHA appraisal, they just want to see more. So that's why I always take attic pictures, smoke alarms. They want to know that I guess it's more secure.
yeah.
So Eileen, what is your average turnaround right now for an appraisal? So from the time that the lender orders it until you're able to get it in?
I mean, I can get it done in anywhere from 8 to 10 days. I like to turn them around because I don't like to sit on them. A lot of it also depends whether you can get in for inspection. The problem here, if it's a vacation rental, you can only get in on Saturdays.
Got it. And there's other reasons for people to get an appraisal, correct? Like you do appraisals for people who want to maybe refinance their home or they want to.
Well, the refinance is still going to get ordered by the bank, but I do estate work. Somebody died and the family needs it by date of death. So it might have been a date from 6 months ago. The attorneys order usually an estate appraisal. A lot of people try to get me to do an appraisal because they want to know what they want to put it on the market for.
Well, Eileen, thank you for all your knowledge. Does anyone have any questions for Eileen? Eileen, do you have any questions for anyone?
No, I actually, you answered it already about how you determine whether to order an FHA or not.
Well, good. I'm glad. I want to thank you again for joining us, especially there are little quirks here with internet.
I mean, if I can help anybody, I mean, you can call me anytime. I'm
Here, you know, you're
Thanks,
muted
Eileen.
there.
We really appreciate you coming on and giving us a little bit of your expertise. So what we wanted to accomplish by having this webinar today is so that anyone who has questions or anything like that could at least have a general idea on how we all work together. You start off, you find yourself the realtor or the real estate agent that you want to work with. You can also interview those agents. You don't have to just pick somebody. You can interview them as well. Once you have found your realtor or your real estate agent, that realtor or real estate agent should sit and do a buyer's consult with you. That is the only way that we can get right down to exactly what it is that you want, what you're looking for. And that's going to help your real estate agent be able to connect you with the proper lender. Nothing happens unless you have cash if you don't get the right lender. Having the right lender and the right agent can make or break the way your transaction goes and can let you have a smooth transaction. So you want a real estate agent and you want a lender that work together, that communicate well, and that their only goal throughout the entire process is to get you to the finish line. So if you have any other questions about, are there any questions in the chat before I go on, Jacqueline?
There are some questions in the chat. I'm going to go ahead and read a few of those off. Mostly, well, having to do with financing here. Some of these might be directed towards Lisette, but there was a question about closing costs and credits. They asked, and I know you clarified some of that you cleared up some of the myths about down payment. The question is, if I have enough money for just down payment, are there options to cover closing costs?
So yes, not always through the lender itself. But there are options to cover closing costs from the lender sometimes, depending on the rate that you get with the bank. So one thing that people don't know also is depending on the rate that you are given, you can either pay for the rate, which means buying down points, or you can get a credit back for the rate. The thing is that you have to be okay with getting a little bit of a higher rate to get a couple $1,000s in credit towards closing costs. So that's one way. And it all differs depending again on the borrower and the transaction and the circumstances, but that is an option. Another option, which is something that your realtor can tell you more about as well, is seller concessions. Sellers are allowed to give a credit to their buyers, depending, it can range anywhere between 3% and 6% or less. Depending again on the transaction, the type of loan you're applying for, because there are restrictions on certain loans on how much the seller can give you as credit. So that's another option as well. And then there's also, this goes into another, actually, I'm not even gonna mention that. There's a 2-1 and a 3-2-1 buy down where the seller can give you concessions to buy your rate down. But that doesn't really help you with closing costs. So that kind of veers off into the rates. But yes, there are options that you can discuss with your lender and your realtor, and it's good to get those things out at the beginning so that your realtor knows how to approach the seller and negotiate the contract for you. And we can work the loan out too and get all those things out of the way in the beginning.
Awesome. That's great info. I'm just running a little math here. So, you were talking about as a first time home buyer, you can buy right now with 3% down, or if it's an FHA, it's 3.5% down. So let's say the purchase price is 600,000, 3% of that is $18,000. In most cases around here in South Florida, that's pretty much equals first, last in security. So if you're going to rent a new place right now, that's pretty much what you're looking at to put down, unfortunately. And of course you won't get any of the benefits of homeownership there. So I think to the person in the chat who asked that, keep in mind all of the things Lisette just said and talk to your realtor about that, about your concerns. Look, I want to buy, but I might only have enough for a down payment and not for everything else. Because chances are there's some options that are available, such as a seller credit. A lot of the loans will allow you to get up to a 3% credit towards your closing costs or higher. And so is FHA, is it 6%? Or
6%.
Yeah. So that's fantastic. So you can get your closing costs potentially covered by the seller and only put your down payment, and you're moving into you're buying a place instead of renting again. So that's super huge. So that was a great question. Another one in here, she asks if I have low credit, but I want to buy, what are your suggestions?
So we can get you into an FHA loan with a 580 credit score. Should I mute?
Oh, go.
No, with a 580 credit score. Now, if your credit score is under 580, then that is a perfect opportunity to sit down with me so I can look at your credit profile and I can help coach you and walk you through the steps to get, to make that better. Now, I want to disclose, I am not a credit repair person. I don't have any kind of training for that. But being in lending for as many years as I've been, I know what needs to be done, and I have credit repair people that I can send you to get you on the right path. And as soon as you hit where you need to be, we're prepared and we're ready to go. So don't be scared if you have anything under 580 to come and talk to a professional, because we're happy to help you. And I love putting people in a place where they can have home ownership, because that's the American dream. And I love to do it. I absolutely love what I do. And I love to help people do it. It's not just, rich people that are buying houses. Everybody is in here trying to do it, and it's possible.
Awesome. That's great. And actually that reminded me, Karen, you have training in credit repair. Is that right?
Yep, that's correct.
Anything you want to add to that? about credit repair, or is it, what's the process like on that? Oh, I can't hear you. Mm-mm. You look like you're unmute. Oh, there it goes. I heard you.
Can you hear me now?
Yeah.
Perfect.
Yeah, now I can't.
Can you still hear me?
There you are. I don't know. It keeps
Okay.
changing because it's not showing you.
Sorry about that. So the way we do it is we actually work with attorneys. So you have your own portal you go through, and you'll go through and they give you step by step. They teach you to actually repair your own credit, which is important. The thing that you want to make sure of, the best advice I can give you for people who want to increase their credit score is, one, pay down your loan, pay down your credit cards and all that kind of stuff, so that you're at like no more than like 3% utilization of your credit. And what that means is that if you have whatever your credit you have access to, let's say you have $100,000 worth of credit, you don't use more than 3% of that every single month. You want it to be as low as possible. You also don't want to miss any payments. Missing a payment it's death for your credit score. So you want to make sure that what I always advise my people that want to increase their credit score, maybe they don't have necessarily credit challenges, but they don't have any credit. They just have the one credit card, their credit score is super low because they don't have a lot of credit. I tell them to put their essentials on their credit card and pay it off at the end of the month before the statement is due. And the best way to do that too is to pay it off 2 weeks, to pay half of it 2 weeks before the payment is due, and then to pay the rest of it right before the payment is due. Because it just kind of plays with the algorithm, if you will, a little bit, and gives your credit a little bit of a boost. But the best thing you can do is, if you want to focus on your credit, is definitely either you can do your own research or you can reach out to me. I'm more than happy to help. But you want to make sure that you are not missing any payments. You're not overextending yourself on credit. You're not buying things that you don't need. And speaking of credit, let's go ahead and get into that portion of it. If you're trying to buy a house, you're not gonna go buy a car. You're not gonna go buy some big, huge item. You're gonna wait to do all of that if you can. You're just not gonna do that because you want your debt to income to look a certain way, which you will talk to with your lender, because I'm not the lender partner here. And you want to make sure that you have access to whatever that you need. And you can't do that if you just went out and bought a car and now there's a $50,000 debt on your credit. So that's what I would recommend for credit repair or for credit, is just staying on top of it. Don't be late. I cannot stress how many people's credit drops a significant amount from just missing a payment. So don't miss your payments, and try not to pay just the minimum. Try to pay a little bit more. You want to pay it down as fast as you can, because they're not giving you the money for free. And that's why I recommend not putting anything on your credit card that you can't pay off at the end of the month unless it's an emergency. Emergencies happen. That's just a part of life. But you want to pay it off as quick as you can. And that's my spill on credit.
I love it. It's, it's important. And I think what's also important to note is that everybody's situation is different. And so, this is blanket advice, but, as Karen was pointing out, some of the advice to pay off some things is, if you want to get points, if you need to increase your credit, if that's what your focus is, then you do that. If that's not your focus, if you already have great credit, you might want to hang on to the cash so you have more to put down and get a better rate. So this is blanket information. Really talk to your realtor, your agent, your broker, your lender broker, and get your team together to really look at your situation, and you're going to get the best results that way. So really important to get your team behind you. We had one more question about mobile homes, which is something that we deal with a lot here in South Florida in particular. So financing for mobile homes is a little bit different. So they're asking if they can use conventional loans for mobile homes.
So Yeah, there is a whole playbook to manufactured financing because there are so many different ways to do it. But a quick cheat sheet that I would love, I wish I had a way or at the time to send all of the realtors in all of Monroe County like a cheat sheet of mobile home financing, because they will know immediately which way to shoot their borrowers. So this is the most important, the most important facts that you need to keep in mind. Single wide manufactured homes can only be financed with FHA. Jacqueline, I know a few years ago, you and I, oh my gosh, I learned so much from that transaction, but
Me too.
FHA will only, I'm sorry, single wides are only financed through FHA if they are manufactured after 1976. Okay, that's number one. Number two, it has to be, in order to pass through FHA, it has to have all of the tie downs that are mandated by FHA, and has to be a certain level above flood. Every part of the manufactured home,
Including
or
stairs.
including the
ground,
stairs.
basically the ground underneath it needs to be above flood, because the stairs need to be above flood, the AC, everything needs to be above flood. Yes, we learned
So
that.
we learned that the hard way,
Yeah.
but besides that, yes, FHA only. Now, if you have a single wide that was manufactured before 76 or before, I do have a program that offers financing for 30% down, 15-year term. That's single wides. Now, when you look at double wides, you can do FHA or conventional. Minimum down payment, 5%. Unless it's FHA, but minimum down payment, 5%. I think I'll get back to you on FHA, it might be 5% as well. I'll get back to you guys on that. But double wide, you can do either one. Same rules still apply to the FHA, flood, and all of that. And you can do a regular conventional fixed rate loan if the manufactured home was constructed after 76. If a double wide manufactured home was constructed before 76 or before, you can put 30% down and get a 20-year term on that type of financing. Outside of that, you're looking at cash or private financing, seller financing. The other thing I want everyone to be aware of is that that special financing with the 30% down and the 15 and 20-year terms, the rates are higher. You're looking 9-10% right now in today's market on January 31st, 2024. So yeah, that's just off top, a couple things to know about manufactured lending. There's another question about assumable loans. I do not have the ability to do any assumable loans. I don't know where you go to get assumable loans. It's not something that I have access to. I know that a lot of people have like assumable VA loans in like the 2% range and 3s. I think that's something done maybe with bigger banks, but I can tell you that on the wholesale and the secondary channel for mortgage brokers, I'm not sure that that is an option yet for us.
I don't think it actually is as much as most people like to think that it is. And it might be the borrowers who are saying my loan is assumable. I've spoken with other lenders about it as well. When we were told by the seller, my loan is assumable, and the lender put it to me like, but how would that even be possible? Because you still have to qualify the new borrower.
That's
It's
always
not
my
as
question.
simple as a name change. So I think there's a huge myth about assumable loans right now. And especially if they're changing rate in either direction, why would they take a 2% and when they could be getting 8% right now, they're just not going to allow it, and vice versa. If you have an 8% loan, why would you? And the rates are now 2%. So it's really, I think it's a very big myth. So that was a great question. It might be on VA because that's for veterans specifically. So the VA might allow something in because it's internal from one vet to another. They probably still have to go through the same qualifying process, but they might allow them to take it over. But yeah, I'd love some more clarity on that. But every lender I've talked to is telling me the same thing, that it's just not, it doesn't even make sense for it to be
It
assumable.
doesn't.
They have to still requalify, so it's going to be a whole new loan. So I'm yet to see
Yeah.
that in any transaction yet. So.
Yeah, that's the feedback I've gotten too about the some mobile loans. Literally every sentence of them have been like, no. So that doesn't mean that it's not possible. It's just that they're just like, yeah, no, why would we do that? So what I hope that everyone can take away, especially the people that are watching, is that particularly for our people that are here or in Homestead or wherever they are, if you are in the hospitality industry, like we have a lot of people here that are like that, people that maybe don't make necessarily a steady income, they get tips. People who are self-employed, people who want mobile homes, people who want to invest here. I want you to see that your real estate agent that you choose and your lender and the appraiser, everyone's going to work together to do what we need to do to help you get the property that you want. Our only goal is to help you and get you there. And there's options. So don't ever feel like there's no option. So if you think you want to buy a house, Jacqueline mentioned how, especially here, First Housing Security, for a 2 or 3 bedroom house, you're looking at $18,000-$20,000 to move in. So if you think you might possibly want to buy a home, get with a real estate agent, get with the person who sent you this webinar and have that conversation. Let them do a buyer's consult with you. It's really simply just a conversation. You'll have a conversation, we'll ask some questions, we'll get to know each other, and we'll see if we can work together. And we'll take that information and we'll give that to our lender partner. We'll give you a list maybe of 2 or 3 lenders that we think would work well with you. If I particularly know that this is the lender that's going to get you there, I'm going to tell you this is a lender that I think you should talk to. And that time you're going to call them, you're going to talk to them, you're going to interview them and see if you're comfortable with them. And then at that point, we'll look at houses. You'll talk to the lender, find your lender. The lender's going to help get you pre-qualified, which, as I stated before, is in the first webinar series that we did on this. It's very important that you have that, so that we're not showing you houses that you can't afford, or we're showing you houses that you don't even like, but you can afford something more. All those things, and also it's going to help make your offer be stronger because you have this letter from the Florida Mortgage Lab or whatever lender you use. That's someone that's well known within the community. That's a local lender, which we love to partner with our local lenders because they know all the idiosyncrasies and things that we have here in our local area. So if you think that you might possibly even want to purchase a home, have the conversation. Doesn't cost you anything to talk, to see if we can find something that works for you. So that's the end of the financing and appraisal webinar that we have now. Next week of February the 7th at 4 o'clock, we'll be digging more into real estate investing. And we'll be with Miss Erin Keel for that one. And she's going to give us some great information. So for now, Lizette, thank you so much. Eileen, we really appreciate you guys coming on, taking time out of your 100% crazy busy schedules, because we're all super crazy busy right now. And we just really appreciate you lending your expertise to us today. And I'm going to send it back over to Jacqueline. And thank you, Jenna, for all of your help.
Thank you for having me.
Thank you, everybody. That was so informative. We've got some great feedback here in the chat, so thank you so much. Again, thank you to the panelists today. We have Karen Williams DeCastro and Jana Pratt from Better Homes and Gardens Real Estate Destinations, Lizette Ramiro from the Florida Mortgage Lab, and Eileen Clark, an appraiser with Clark Management Services. You ladies have been a wealth of knowledge, and to our other committee members who were not speaking today, but have been on other webinars in the series, Erin Keel, Samantha Arce, Ada Rodriguez, Stephanie Camacho, and did I miss anybody? We had a full house there. I think that's everybody. So stay tuned for next week, February 7th, 4 p.m. investing. And February 21st, we're going to talk about home inspection and the title phase. We have some industry experts there as well. And March 6th on insurance, another loaded topic. So stay tuned. We look forward to having you return. And as always, feel free to reach out to any of us with any questions you have. I'm going to post this in a few different places, and I'm going to put Lisette's contact information in all of the panelist members from today. So thank you so much for joining us, and we'll see you next time.
Thank you.
Bye.